Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be talking about our stock market weekly recap for February 26th through March 2nd. So we had a lot going on this week. I will try and make it quick because I did end up recording this. It was 30 minutes and way too long. So I'm going to try and cover as much as I can, as fast as I can, and let's go ahead and get into it. Of course, if you are brand new to my channel, go ahead and hit the subscribe button. I really appreciate it. And I make these stock market weekly recaps every week, kind of covering all the news that took place in the week. So here we go. So Berkshire Hathaway, we started off the Monday on fire. Warren Buffett came out and said had $116 billion to invest. I made a video talking about Monday. I believe Warren Buffett's going to be investing in infrastructure companies, companies that build houses, companies that repair the roads, that do bridges, that provide these materials for those companies. So wood, steel, it's going to get it's going to get taxed, but and so on. So infrastructure is where I believe Warren Buffett will end up. Railroads, transportation stuff. So I believe that's where Warren Buffett's going to be putting his money. But I also talked about the end of the video. Tuesday, the markets, I believed, were going to go down due to the new Fed chairman, Mr. Powell, talking and discussing interest rate hikes. And that was what I was looking for on Tuesday. If I had sold my money, sold my stocks out on Monday, I probably would have been very nice right now and not down, percentages this week. But, why would you sell, right? So I put a video out that was a live kind of watching Mr. Powell talk and give a speech, and I said this will move the markets. This was actually posted in the morning, and of course the markets plunged Tuesday after he announced 3 to 4 interest rate hikes in 2018. So I posted Yahoo's snippet of after the Fed speech. I also posted for the end of the day sell-off. There was a huge end of the day sell-off, so I posted this. I was waiting for the end of the day sell-off, and it happened and took place. I ended up buying a new book. As you know, I'm getting into real estate really hard. I'm working with a real estate agent in the state of Oregon and also with a turnkey provider out of state. So I'm looking to buy one house in state, one house out state. I bought 2 books. They're both for free on YouTube. I have The Millionaire Real Estate Investor, and I listened to this book on Wednesday. I drove out to a location I was doing some work on. So I spent about 3 to 4 hours in a car just driving, just listening to this book, and every 5 to 10 minutes I would be like, dang, that's a great idea. I wish I could write it down or take a note, because this is what I do. When I read a book, I take a highlighter to it and just highlight every single thing that I feel will benefit me to sort of hammer into my head. So at the end, and I got about 5.5 hours, 6 hours into it, and I said, I need to order this book. So I went over to Amazon. It was only $13 and some change. So I ended up purchasing it. You can see there $13.92. I bought it for $0 because I load up on all sorts of gift cards, and it's a great, great book there. So I did link a link page to it. If you guys are interested in checking out books that I sort of refer, you guys can check out the shop over at the Financial 101. I have real estate books. I have featured games. So I own Monopoly Junior. Me and my kiddo play it. He's 2.5. He's almost 3 in May. He loves playing Monopoly. He likes being the car because he likes the Cars movie, and he loves it when I pay him money for landing on his different places. So I'm trying to teach him real estate right now because I believe that's going to be the future. As I begin to get into real estate, I can pass it down and make it all passive. So I also have some stock market featured books. A few of these that I own are, of course, The Guide to Investing, Rich Dad Poor Dad, The Richest Man in Babylon. I linked. There's a free audio version out there. The Single Best Investment, Own It, Snowball Effect, The Intelligent Investor, Security Analysis, Unshakable, and I believe I have The Bailout Nation. I don't know where it's at. I also have a couple other ones that are on the shelf, such as from Dave Benson. You can't increase your company, unless you're Apple or someone who does it. You rely on debt. Utility companies, real estate investment trusts, all those companies are going to get hammered because they take out a lot of debt in order to start new projects. So I I'm gonna say, I sold off on a lot of my positions that were utility based or real estate investment based, and I decided to move. If you watched my other video for the end of the month for February, I'll link in the top right corner. You'll see that I own primarily two stocks now, Apple and then S&P 500. And of course, wowzers, should we wait and test the bottom again? So that's what I kind of did here. S&P 500, it kind of fell down and to the 144, 248, 246 range. It did fall back below here, so I think the support levels around 244, 245. If you can buy the S&P 500, ticker symbol VU, around 244, I think that's a safe level. My wife bought it back here on February 8th. She bought it super cheap. She's still up in the position regardless of how it's been lately this week. So good job on her. Stock market closed yesterday. No one was safe. So Apple, man, when I logged in and I saw Apple was down 2%, I was like, what? But Apple has gone up nearly 10% since I started owning it here. It was back at 164, I believe, or 162 when I bought it inside my IRA. So, not to spread doom and gloom, I thought this was interesting. Nine experts warn of another stock market correction, and that's gonna happen. Things are gonna happen. I'm moving away from different things here. Trump Thursday took down the markets again, announced he wants to create a trade war. So China and Russia and a few other countries, Canada, they don't think this is a great idea, of course. So he wants to begin having tariffs on importing steel and aluminum. So I posted 3 articles there, all great reads. And Friday, of course, he did cause the stock market to continue to kind of plunge down because he tweeted out that, trade wars are great, we can win it, it's great in the economy. So some of the videos I released this week were talking about my real estate investments, future, why I'm choosing to get involved in real estate, and my thought process on buying, rehabbing, renting, and such. So the house that I actually used in this video got bought out now within 2 days after I recorded the video talking about it. Was actually a great entry. I believe I could get it for $45,000. I could put $30,000 into it. The area is worth $120,000, and somebody already bought it. So any of you guys out there that are watching this that bought that house, good job to you guys. So I am actually looking at another house here in Oregon to buy and another out-of-state house to buy. So putting some money there. Discussing Friday, Monday market rally. Oh, that was just the Fed chairman. So the whole video, if you guys want to check that out, I talked about Warren Buffett, where I believe he's going to go. I gave a couple examples of where I believe. Oops. Another company, another group that I follow for stocks. And then we talked about 5 stocks with ex dividends next week. We had car parts, KMB, OMC, Dunkin' Donuts. A few of these, I don't even know what these companies were prior to me really, investigating them. That's why I do these ex dividends with next week, because this makes me look for companies that I would never have seen otherwise, other than the headline stocks. I would never have even took a look at Eat or Dunkin' Donuts or the car parts wholesale company. It's GPC. I don't know what I forgot what the company name is. Kimberly-Clark, of course, I know that one. I own it. But a few of these other ones, I would have never seen them or even looked into them. But every Wednesday, I look for stocks that are coming up with ex dividends next week. We screen them for PEs less than 25, yields over 2. We look at to make sure that they have had increasing revenue, net income over the last 10 years. And then a lot of times these companies also have huge free cash flow. Dunkin' Donuts was up, I believe, one of the best ones. Had good, great free cash flow, good, dividend increasing. It looked like a great stock. And 2 of these have been paying out dividends for more than 45 years, which was the wholesale, car parts wholesale, and then Kimberly-Clark. And see here, stock market changes to my monthly stock portfolio. So my stock portfolio went down huge going from January to February. I believe it went down like 6-7%. if I did the math correctly. And then I also made a new record of $228.30 in dividends, so that is great. And then Friday released the video talking about setting up a $10 weekly deposit into M1 Finance. Now, as you know, if you deposit money into M1 Finance, you set a threshold of $10 is what it needs to be able to reinvest. So the way I created my wife's portfolio over at M1 Finance, every week or so she gets paid a dividend. So we can actually cover all the dividends that she got paid out in M1 Finance here in an upcoming video, but she's been paid out by 4 different companies now, dividends, and the way I set up just a $10 schedule will allow her on Monday, $10 will go in. Any previous dividends that she was paid out the week prior will get reinvested in the stock market, and it will be able to average down on any positions that I'm currently down, such as Walmart, which tanked earlier this week due to their earnings. So that is it, I believe. Okay, so a couple companies that I was watching this week that did terrible were Walmart. Walmart's in my wife's stock. I was looking at it. Retail did a lot of stuff. So Walmart, they released their earnings. Their in sales was fine. Their online sales did not do as well, which is where everyone's looking at Walmart in order to compete with Amazon. So they don't do very well, and their stock tanked 10%. Then Best Buy Thursday released earnings. They were complete opposite. Their online presence increased. One thing I noticed with Best Buy is that I love to go shopping locally. I would 100% prefer to be able to go out to Barnes and Nobles, to be able to go out to Best Buy, buy something that they price match to Amazon. But Best Buy does price match to Amazon, so if I buy anything that I see on Amazon that I'm like, hey, I want that electronic, I will go to Best Buy and buy it there, and then they'll price match me. I went to Barnes and Nobles today to pick up 2 books, and they would not price match me unless I pay, for their yearly subscription, which is $25, $30, and then they'll be able to price match me down to the price, not the sale price of the Amazon stuff. So I decided not to do it. I just ordered on Amazon, and I got it for free, right? So. And then the Dow closes in the negative due to McDonald's. So McDonald's, they slashed a bunch of the prices, created that $1, $2, $3 menu. It didn't do so well, so they fell nearly 5% on Friday, and that's what caused the Dow to kind of tank off this week. So that is basically it as far as what I posted over on Facebook here. So if you guys are interested in checking out the shop, check out the shop. And let's go ahead and jump into what exactly happened in the stock market. Now, this is stuff that I haven't fully took a look at myself, but we'll take a look at here in just a minute. So some of the stocks that gained and lost on Friday were Foot Locker, down 12%. So they had some bad earnings as well. Anything retail, brick and mortar, if you have no online presence at all, you're going to be suffering. So Foot Locker went down, McDonald's went down, Ultra Beauty, Best Buy. I'm surprised that went down, but Thursday it had gone up 4%, 5%. So I can see this kind of going back down as people are like, hey, we bought it for the increase and now we're selling it off. So Lowe's also had some not great earnings. I read an article over at Seeking Alpha about this could be a good time to buy at a Lowe's. Lowe's was one of the ones that was in my portfolio, ran up very nicely. Now some of the winners for today was Gap. They actually released earnings. They were actually surprisingly well. And we have Universal Health Services, Range Resources Corp, and Kohl's Nordstrom, so they released good earnings as well. A lot of stocks that didn't do so well this week were gun stocks, so Smith & Wesson tanked quite a bit. That's some of the news I was taking a look at. So today's changes on Friday here. Financials. When financials and technology are in the positive, the stock market's generally going to be doing good. Telecommunication services as well. So things that I like to look for in the morning is financials, telecommunications, and information technologies. Healthcare can be very nice as well, but financials and technology are what kind of drive the S&P 500 forward a little bit there. So a couple other articles on the way. Yeah, Dow drops more than 3% this week, and it's not just the tariffs. It was due to Walmart, due to McDonald's, and due to a few other ones. So we can actually take a look at, I forgot about that. We always do this every week. S&P 500 down 2.04% this week. Friday, it did recover half a point at 0.51. So out of this week, we had 2 out of the 5 days in the positive, but that was not enough to make us gain. You can see very good day on Monday, up 1.18%, whereas Tuesday, Fed chairman talked about interest rate hikes. Wednesday continued over into Wednesday, which I expected. After Wednesday, we would go on the up and up, but then Thursday, it was beginning to recover. At 10 o'clock on Thursday, Trump announced that they're going to be doing the whole tariffs, and there was a huge sell-off there, and then after hours tanked a little bit more. Then he tweeted out in the morning, oops, getting some email, and he tweeted out, and then after that it began to recover. So anybody that bought in during this time, the interest rate hikes, that is going to hurt prices in the short term, but this is all political right here, political, so it's going to be recovering into the next week, I believe. Next week we're going to recover this 2% loss. So hopefully you guys have been buying in on this dip. I think it's a great buying opportunity. I don't know if we ever recover this, but the little support right around 244, 245 range. So if you're able to buy around 244, 245 as it dips into that level, the S&P level, then that's a great buying opportunity. What else here? Where was I? Oh, S&P 500, okay, down. Still up, year to date, up 0.66. Dow Jones is back in the negative this week, down 3.05, 3 points this week. And of course, Walmart, McDonald's, a lot of those companies drove that price down into the dirt. And so 4 out of the 5 down, 4 out of the 5 days negative. NASDAQ, of course, is the winner this week. Ended up very nice positive. Being tech heavy, it really helps it out. Those semiconductor stocks and the big ones. So up 5.13% year to date, only down 1.08 this week in comparison to the other ones that double or triple lost what it had. Yep. Okay, so as far as the weekly recap, this is what I have not read yet. Basically, stock market tumbles this week with the S&P 500 dropping more than 2%. Let's go ahead and zoom in so you guys can stop the video and read this yourself. But some of the main highlights is talk about the S&P 500 losing 2%, the Dow Jones losing nearly 3%, and then the NASDAQ only losing 1%. S&P 500 did jump up 1.2%. We did talk about that. Fed Chairman Jerome Powell, of course, testified, and we already covered the whole summary of that. What I talked about what exactly he expects this year: 3 to 4 interest rate hikes. Yeah, 3 rate hikes for 2018, and yeah, going up pretty nicely. Interest rates are rising pretty nice, like 4.15%, I think, if you're trying to get a house. And that's all going to go, they're expecting it right around 5%, I believe, by 2019. So it's going to be much harder to buy a house on a loan. So if you're buying with cash, cash is gold. And, S&P 500 found support level at the 50-day moving average on Wednesday, but selling accelerated after the index broke through that level on its second attempt. If the weak selling continues, investors will be looking for other potential areas of support. So I believe we hit the support level 2 times this week, and I don't believe we're going to be falling next week. This week was just a political mess, the Fed chairman, Trump, and stuff. So 11 out of the 11 sectors finished this week in the negative. And here we have industrials down 3.3, materials down 4%, technology down 0.8, consumer staples 1.3, telecom services down 0.7, and then all the other sectors lost between 2 to 2.9%. So big changes there. Of course, there's our changes for the week there. Dow Jones down 771, NASDAQ 79 points, S&P down 56 points. So that is it for this video. If you guys have enjoyed the video, remember to like, comment, subscribe. I didn't mean to keep you guys for 22 minutes. I know there's a lot of chit chat in there. So if you guys have enjoyed the video, if you guys did like the content, the review and summary for the week, go ahead and hit the like button. If you're brand new to my channel, hit the subscribe button in the bottom corner. I really appreciate it. It helps my channel out. And of course, as a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them and just providing some news that's publicly out there. So thank you guys for tuning in. I will see you next time. Have a great day.